In this step-by-step leverage trading tutorial, we will go through what leverage trading is, how it works, the fees you'll be paying, the risks and the advantages of leverage trading in the form of crypto futures, order types, and some sample trades as well. If you are new to Cheeky Crypto, my name is Nick and I cover a lot of the technical elements for crypto. Everything from setting up staking pools, technical analysis, and trading ideas within our Patreon and Discord server. Okay, let's make a start with this tutorial. The first thing that we need to do is to decide what platform we want to be trading on. There are lots of different options, but generally the decision process will follow something very similar. Essentially, you want something that is low in fees, has good liquidity and good trust, has a good number of different crypto trading pairs, preferably has no KYC if that's what you want to do, and obviously check for country restrictions. And of course, if there are country restrictions, you can use a VPN tool. I'll link a few in the descriptions below and also in the Discord server if you're interested in a few of them. And when it comes to KYC, as I said, you ideally want one without a KYC requirement. They are quite hard to come by. But you know, there are some good options if you don't want to KYC, and then of course if you do want a KYC, you can do that as well. So you know, there are essentially like three kind of major platforms that we kind of like to talk about here at Cheeky Crypto. We talk about Binance, but Binance is very much does require KYC, and it is limited depending on the country. For example, in the UK, I can't quite easily go to the derivatives market here and go and trade the futures. Now we have things like Bybit. As far as I know, there's no KYC, but has got country restrictions. So again, VPN tools can get yourself around that. It's good for lots of liquidity. It's got a reasonable amount of trust out there. It does have the occasional wick in the high range and the low range, and that can sometimes liquidate you when you're unexpecting it. But for the most part, it's a kind of a go-to platform for many. And then there's my personal favorite at the moment, which is 𝗕𝗘𝗪. Now, 𝗕𝗘𝗪 is where I'm doing 100% of my trading at the moment. It has good liquidity, good pairs. It does not require KYC until you reach a certain threshold. It has got some country restrictions, but it's actually just a pop-up box. You can dismiss the pop-up box in the US, for example, and then continue trading. And of course, you always have the VPN option as well to kind of get around some of those restrictions. Essentially, yeah, I think 𝗕𝗘𝗪 is kind of the way I like to kind of go, but there are a few other options. We have been kind of, I guess, a bit vocal about avoiding some others that we don't necessarily have that kind of trust element with, KuCoin being one of them. We haven't got huge amounts of trust there. Then you've got crypto.com, not really sure where that's going at the moment. And they have the exchange online. They don't have it via the app or anything like that. So in terms of like ease of use, in terms of you know, good liquidity, low fees, good number of different trading pairs, the KYCs, the country restrictions, to me, 𝗕𝗘𝗪 seems to be the best one available at the moment. I've linked in the description below both the Bybit and the 𝗕𝗘𝗪. If you do sign up to those, then obviously they really do help the channel out massively, and they've got some great bonuses up for grabs there as well. In this tutorial, I am going to be using 𝗕𝗘𝗪. That is my preference at the moment, so I'm going to use that through this tutorial. Okay, so what are futures? Futures are derivative financial contracts. So let's just break that down. A derivative is basically, or derivative financial contract basically is a contract that determines the price through the actual asset. So if we take Bitcoin as an example, you have BTC, which is an actual cryptocurrency asset, and let's say it's $17,000, and then you have the derivative version. The derivative is basically ascertaining the price from the BTC. So it is a contract that looks at the price of Bitcoin and mimics it. Okay, it is not actually the actual asset. So by buying into a derivative financial contract, you're not actually buying the underlying asset as such. Okay, it is basically just a derivative of the asset. So hopefully that makes sense. So if we kind of think about what a future is, it's basically a derivative financial contract that basically obligates parties to either buy or sell the asset at a predetermined future date and price. So this allows us to take a look at Bitcoin and speculate as to whether the price is going to be higher in 1 to 2 days or a week or a month, and also the ability to look at it and say, okay, I think the asset Bitcoin is going to be lower in value in, a few days or a few months, and it allows people to transact on that speculation. So you can take a look and you can think to yourself, there's a party that thinks the price is going up and the party that thinks the price is going down, and they agree to buy or sell at the predetermined price in the future. Now, these are fixed date kind of example, but you can have examples where the contracts just continue to go on and it gets sold on from one party to another and so forth. And for the most part, those are the ones that we are pretty much going to be talking about in this tutorial. Right, we're going to be talking about the futures market for crypto and specifically the derivative financial contracts between people. And we call this leverage trading in crypto just to kind of keep it nice and simple. And we are going to go through a lot of the detail of that and what it means and how to actually do it. But I do think it was important that we talk about what futures are. And I'm going to just quickly go through some of the key takeaways here from Investopedia. Futures are derivative financial contracts. They're basically obligating the buyer to purchase an asset or the seller to sell an asset at a predetermined date and price. Now, we're going to skip over the date part because we are just going to talk about predetermined prices, which we reference as liquidity or more specifically liquidation events or take profit events, okay? A futures contract allows an investor to speculate on the price of a financial instrument or commodity. We're just going to be talking about crypto in this example. Futures are used to hedge the price movements of an underlying asset and to help prevent losses from unfavorable price changes. So again, going back to that farmer example where a farmer might be looking to get some wheat seeds to replant his field. He doesn't know necessarily the future price of it. He's able to lock in the prices today, and someone might say, yes, I'll do that contract and you can have it at this particular price today. And it doesn't matter if the price moves up or down. He's kind of locked in his contract as such, right? And so people in businesses all around the world will use the futures market to lock in prices for various different things, whether that's the jet fuel for airplanes, or whether that is the gas that is used to kind of fuel various different heating systems around the world, all the way through to farmers and their grains and all that kind of stuff, right? It's not overly important to think of us hedging the markets in the crypto space, but people can do that with their main portfolios. But I would say that's pretty much high risk as like a long-term kind of hodl bag that they might want to use as collateral for future kind of leverage trading. I would say it's high risk. I wouldn't entertain it myself, but it is something that can be done. And you can use hedging to kind of mitigate against those assets that are volatile. So let's say you're holding a lot of Bitcoin, for example, and you kind of hold that in cold storage. You use that as collateral and you're able to trade all of the various different swings. But, I don't think it's worth it. Futures contracts, though, they trade on the future exchanges. And there are a few. We've just talked about Binance, Bybit, and BitGet. I prefer BitGet myself for trading on the cryptocurrency market and the contracts that are there. Okay, so in a nutshell, that's kind of what a future is. We're basically just speculating on the price action of a cryptocurrency asset. We get to decide whether or not we want to go long, as in we think the price is going up, or we get to go short, in which case we think the price is going down. So let's talk a little bit now about why use futures. Well, we can make money when the price goes up, and we can make money when the price goes down. Some platforms like Binance will even allow you to use up to 125x leverage, which is mind-blowingly dangerous. I definitely would not recommend anybody go and use 125x leverage, specifically if you haven't got significant experience in this space of using leverage. Okay, so let's talk about leverage, and I've got a couple of examples here. Basically, leverage in a nutshell is the ability to multiply your gains, but it does also have the ability to multiply your losses. Okay, so here's an example of using 10x leverage. Okay, you have $1,000 in your account. Without any leverage, you would make $20 if the price moved 2%. If you're using 10x leverage and you make that 2%, you would actually be trading with $10,000. It's 10 times the amount of your account, which was $1,000. Therefore, that $20 that you made on that 2% gain actually became $200. Now, again, if you had a 2% loss on $1,000 without any leverage, you lost $20, right? -20. However, if you lose 2% on a 10x leverage position, you're losing $200. So all of a sudden here, you can kind of see that this illustrates the ability to multiply your gains, but also multiply your losses. So using leverage is incredibly high risk because it does, if you do not know what you're doing, it does kind of allow you to lose a lot of your account funds very, very quickly. So make sure that you're very confident in what you're doing. Build up to these kind of positions. Start with a 1x leverage, 2x leverage, and slowly work your way towards maybe 10, 15, 20. I definitely wouldn't really be encouraging people to think about anything really above 25x. I think that is more than enough leverage for the most everyday person. Going above and beyond 25x would require significant amount more experience in the space than many of the newbies that I do see at the moment. So hopefully this gives you an idea as to why you might want to do this, right? You might want to kind of entertain the idea of using the futures market because you're able to trade in both directions, both up and down. So you can make money in both directions and you're not kind of just sitting waiting for the next big swing opportunity. Using leverage is risky. You can, of course, start at a 1x leverage, basically no leverage whatsoever, and take advantage of both directions. And that is always a good starting position if you're dipping your toe into this world. You can then slowly work your way up, but I would say encourage it to use small amounts and small leverage to start with until you get more comfortable with the processes. And as you can see, on a 2% gain, using 10x leverage, it can be pretty meaty on a reasonably small account. Okay, let's move on to the next section. Okay, so the first thing we need to do is obviously decide the platform that we want to use. Once we've made that decision, we've signed up, we've got our account all kind of, set up and, if you want to, KYC'd, all that kind of usual stuff. The first thing that we need to do is obviously add funds into the account. So here I've logged into a 𝗕𝗘𝗪𝗓 account. I'm just going to come on over into the account overview area. We can just click on overview if we want to, or we can go straight to depositing crypto. Okay, so I'm going to click on deposit crypto. This is going to load up our deposit screen. It is reasonably self-explanatory. You choose the asset that you're going to basically deposit in here. I'm going to deposit some USDT, and I'm going to come down here and basically select the chain that I'm going to deposit on. I'm going to use the Ethereum chain here, so it's going to be nice and quick and simple, and it's going to give us the address that we want to deposit to, which is this little one just here. I will obviously blur this out for the video so that you guys don't, go ahead and deposit funds into this account or whatever. There is a little copy button just over here though, so we'll go ahead and give that a click. That will allow us to copy this address, and then I can go ahead and log into my MetaMask, for example, and send over some USDT on the Ethereum chain. Now, if you do want to change that, you can obviously click back into here. You can change it onto the Tron network, the Binance Smart Chain. You can select any of these different chains that you want to send the USDT on, or any of the other assets. This will be determined from the asset that you choose. So if you want to deposit Bitcoin, it will only let you select Bitcoin or the Binance Smart Chain, for example. Okay, so choose the asset that you want to. There's a couple of quick options here, so I can deposit USDT, and I will select. Most people will probably use the Binance Smart Chain, but my USDT at the moment is on the Ethereum chain, so I'll load that up. I'll then be able to basically just copy the address and transfer the funds there. Give me 2 seconds and I'll go ahead and deposit some funds onto the account. Okay, whilst I wait for those funds to arrive, I think it was important to also note that you can automatically transfer the funds to different parts of your 𝗕𝗘𝗪𝗓 account here. So from this drop-down menu, I get the spot area, the P2P, or the USDT margin account. Obviously, I've got then this preset up to the USDTM. This basically is the futures market. By default, I think it would be under spot, and obviously under spot, it would be a different part of your account, and you'd have to transfer it from your spot account to your USDTM account, okay? But by default, I have that on USDTM, and that's where it will be distributed to. So for the most part, just make sure that you are selecting the correct area that you want to transfer it to. Otherwise, you might think it's lost somewhere in the ether, and actually you've got to then go find which account that you've actually deposited it into, and then send it to the account that you actually want it to be deposited to. So it's just easier if you make sure you select this. I did forget to mention that before I actually started the transfer. Fortunately, mine's already set up this way, so it automatically goes here. And I think it basically just remembers the last place that you sent it to. It's not like there's a setting that you go into. Basically, once you've done this once, it will always say USDTM, unless, of course, you want to switch that up and deposit into the spot account, in which case, it will move it accordingly. So really quite straightforward and simple. Now on the Ethereum chain, it can take a little bit longer to deposit funds over into any of these platforms. It doesn't matter which. It can take up to 10 or so minutes or so just to get the Ethereum confirmations through, and then obviously it will appear inside your account. You will get a notification up here in the top right hand corner, so just bear that in mind. And also down here you will see your recent deposits as well when they come up and through. If you've got the mobile phone app, you'll get push notifications as well, so you'll get all those kind of notifications through. It's faster on the Binance Smart Chain, the Tron network, the Polygon network. The Ethereum one is unfortunately slow, but that is where my USDT was at the moment. So for that most part, just give it some time. It will eventually arrive in your account, and then we can move on to the next step. Okay, so once your funds have arrived in your account, you can see them in the asset overview. Here I have the USDT, and I've just deposited $100 in there. And this here is the spot account. If you come over into the futures account, you will see it just here at $100. The total equity of the entire account, all of these different areas will be aggregated together at the top. So under the spot account here, if you have made any mistakes in depositing the USDT into your spot account, you can come over here to the transfer function, and you can transfer it from the spot account to the futures account. Okay, but if you go over to the futures account and you can see the deposit there, then you are ready to go. The next thing you need to do is ascertain what we want to be trading, right? And there's lots of different options and all that kind of stuff. First of all, I want to talk about the navigation elements here, and because it can be a little bit confusing if you're new to Bybit, BitGet, or Binance, for example. There's a lot of things to be paying attention to. For the most part, we are talking futures, so you can see the option right at the top there for futures, and it's futures M that we want. There are USDT M futures, USDC M futures, Coin M futures, futures grid trading, and demo trading as well. So demo trading can be really good if you're new and you want to practice a little bit, so do recommend checking that out. But we obviously deposited USDT, so it's the USDT M futures option that we want. If you deposited USDC, then it's the USDC M futures that you want. Personally, I avoid using Coin M futures. It's the other way around. Basically, you're collateralizing the other assets rather than USDT. So you're actually using Bitcoin, ETH, XRP, for example. So I try to avoid that, and I avoid the futures grid trading as well. Personally, I like to have the control. So what we're going to do is we're going to go into the option here for the USDT M option futures in the moment. The other things that are available here, you can buy crypto directly. So if you haven't got crypto to deposit, you can also go in here and actually buy USDT or USDC, for example, with a bank card, provided your bank will allow you, of course. There's spot trading. So if you want to do zero fees on spot trading, then this is a fantastic option as well. So you can check that out. We can come over to the markets. You've got copy trading, strategy trading as well. Lots of different options to talk about, but really they're outside of the scope of leverage trading. I'm going to focus all on this USDTM leverage trading for this tutorial. Okay, so we're going to click into here. This is then going to load up what might be a little bit overwhelming to start with. And this essentially is the kind of trading portal, if you will, for the market. So straight off the bat, you're going to open up, it's more than likely going to open up on Bitcoin USDT pair, but you do have options over here, right? And by default, in fact, you may even have all of these options. And I just collapse this down for the use of most of the time. I don't need them open. But for the most part, here you have a lot of the really popular pairs, right? All of these are USDT pairs, and they are all future contracts, right? So essentially all of these are designed to use leverage, right? So here we can see Bitcoin, Ethereum, XRP. There's a little fire symbol next to most popular ones. So again, it gives you an idea. And any new ones that get listed, such as the BAT to USDT, it's got a new label next to it. So you get a good option. I really like trading on things like Polygon's Matic, Sandbox. I've not had terribly too much success with XRP because again, the community moved that price price quite a bit, so I try to avoid it if I can. Bitcoin, Ethereum, so you name it, there's a lot of different trading pairs in here, lots of different things to kind of get your teeth stuck into. We're going to come on down into probably a few of these during the video tutorial, so you can take a look at lots of different kind of options. We'll leave it on Bitcoin for now as I kind of walk through the rest of these. I'm going to hit this little toggle button and we're going to collapse that down. So let's go ahead and talk about what else we've got going on here. Here we have a trading view. It's an okay trading view. It's pretty reasonable. You get access to a lot, but you don't get access to everything. It does save some of your analysis, and from time to time your cookies could wipe it all clean. You should be a little bit careful. Generally speaking, I use a trading view account that's set up specifically for my trading, so I can come into my trading view accounts, for example, and you can see here, obviously Bitcoin, it's come down to where I estimated it would, and it's bouncing up from here, for example. Now, I can, of course, depending on the different kind of levels of platform that you have, or trading view accounts, there's lots of different ways of setting these up. Now I do have in here a trading strategy area, okay, and this is basically just a layout view that allows me to basically have something set up for trading, so I always find that's really, really useful. Other than that, there is a list that I've created over here, okay, and I come down into the trading area, and then I've got all of my BitGet pairs listed down here, and this basically gives me the price feed data exactly for BitGet under the contract. So if I click into Bitcoin here, you can see here it is the perpetual contract, and it's on Bybit. If I scroll down a little bit lower, I have this one here, and it is the contract, it's a mixed contract for BitGet, and these are the ones that you want, okay? So I have a list for BitGet, I have a list for Bybit, I have a list for Binance, and all of these come under my list of trades, right? So if I go into BitGet for BTC here, and I come back to BitGet, these two things are exactly the same, which means I can chart it up in a proper trading view when I have access to everything, all my analysis, and I can then replicate that in here if I want to. Okay, so just know I don't tend to use the charting functions that are in BitGet. I use my trading view, and then I basically I'm using the contract data from BitGet in trading view to give me the analysis. Over here we have the order book. This shows us the people that are selling and the people that are buying, essentially, really quite straightforward. And then over here on the right hand side we have the area to actually set up our trades, and this is the part that's probably going to be the one that we need to talk a little bit about. And there are several different things that we have to kind of think about when it comes to these trades. So the first thing is this little area here is called cross. Okay, this is a drop down menu. If you click into this, it gives you isolated or cross. We only ever trade on isolated. This means that you're not risking the entirety of your account. If you have it on cross margin mode, this basically means that you're giving the trade access to the entire account that you have at BitGet as your liquidation assets, as your collateral assets, right? So you'll basically be risking your entire account if it is set to cross. If you set this to isolated, it is basically isolating a very specific amount of your account to the trade, and you get to dictate what that is, whether you're going to be risking 100% of the account or whether you're going to be risking 10% of the account. Okay, it's only going to be isolated to whatever you select. Okay, so I always trade on isolated because it gives me more control over the entirety of my trade or my trading account. I don't want to be mixing my different trades together in cross. Okay, so I always select it as isolated. Okay, then you get two options here. For long, you have a leverage meter, and then for short, you have a leverage meter. Okay, now if I click into the long side here, by default there's going to be like 20x. It's far too much if you're just starting out. Typically I have risk tolerances depending on where my stop losses are as to how many x's I'm going to use in leverage. Like I said, you can go down all the way to 1x leverage as if you're not using any at all. This is a good starting position for many people. Then we can kind of layer this up. We might go 1 to 3x on a really poor trade with a stop loss that's so wide that, you know, just generally it's not a good idea to trade it, but you're kind of bored and you want to play around, then you might want to do something like that. Okay, otherwise we talk about usually between 5 and 10x depending on the kind of trade, and the maximum I would ever go to would be 25%. Okay, and here, or 25x, right? You can see it goes all the way to 125, and that is just absolutely insane. I would never do that. So I'm usually hovering right in this first little section here, and I'm determining what I want to do depending on the criteria of the trade. Okay, so that's where you get those two options. You're going to have to select those pretty much every single time you do a trade. They will stick to whatever you last set it as. So if you set it to 20, it will always be 20 unless you change that. And if you set it to 10, it will always be 10 unless you change it, okay? So that's kind of what that part there is. Then you have limited and market orders and trailing stop orders. I'm not going to talk about the trailing stops because I do think that's a little bit more advanced. I want to talk more about the limit and the market order elements at the moment, okay? And maybe in the future, we'll talk more about the trailing stops. Personally, I like to have a little bit more control over the kind of trades and all that kind of stuff. So what we'll do is we will focus more on the elements of how you could predict the future of where you think the price is going to go and put your orders in via limit. And then if you just want to enter the market right now, you'd use a market order. So under a limit order, it's exactly that. You're basically going to be telling it exactly what price you want to enter the market. Okay, so here you can see that the price of Bitcoin is moving up a little bit. So you can put in the price here. Let's say you wanted to short the market. You'd put this price in, let's say $17,000 like this. Okay, you would risk maybe, and here you got a little slider, say 10% of your account. Okay, and it's a 20x position, okay, because that's what we've got selected here. So for the case of this, I'm going to short this at 10x, okay, and it's only going to use 10% of the equity of my account, which was $100, okay? So it's $10 essentially, and I'm using 10x leverage. So this is the equivalent of shorting Bitcoin at $100, right? Now, if I go ahead and click on this short area, it would enter that short order. It wouldn't actually enter the market until the price hit $17,000, okay? So it basically goes down into your open orders. So if I quickly do this, it gives you the warning, it tells you exactly what's going on, it tells us what our liquidation price would be, and all that kind of wonderful stuff. So I go ahead and click confirm on there, okay? Order failed because it doesn't meet the minimum requirement of 0.01 BTC. So Bitcoin's a pretty bad example on this. Let's just go hop on over into something else that's going to be a little bit easier and a little bit lower value so that we can actually go ahead and do an example. Let's go ahead and jump into Matic. I do like trading a bit of Matic here. Okay, so let's go into this, right? We can see that the current price is about 78 cents. Let's assume that we want to short the market when it goes to 80 cents. Okay, again, we're going to be risking 10%. We're on isolated, okay? And we're currently on 5x here. We'll go and increase this to a 10x position on Matic. Okay, so we'll confirm that. So 10x short on Matic on isolated. When the price reaches 80 cents, I'll go ahead and do 10% of my account and short the market. We'll confirm it. And order is placed. Now over here, we have the open orders. This is basically showing us the things that we've kind of got already in the market. You can see it also getting listed right here. This is our open short. So when the price comes up here, it will start shorting the market for us. Okay, we can see that we have all these details about our open position as well. We've got 124 Matic, that's on order, 0 are actually transacted at the moment. The price is 80 cents. There's no take profit or stop loss associated with this, and it's unexecuted at the moment. Okay, so I'm going to click cancel because I do not want that one in the system. Okay, and what we want to do is we want to talk about the take profit and stop loss area here. This is a toggle button that, or a tick box that is off by default, and I think that's a bad idea. I think it should be on by default rather than off by default. But here you can basically put in the take profit range and the stop loss range as well. Okay, so you can go long and you can go short by putting in a TP and the stop loss as well as the entry price, all on the limited area with how much of your portfolio you're willing, or the account that you're willing to kind of risk. And you can go ahead and basically say, okay, I want to enter 80 cents, I want to take profit at 0.75, and I want my stop loss here at 0.81. Okay, so you got 1 cent kind of really tight stop loss, and I'd go ahead and I'd enter into my short position. I'd go ahead and read all this detail because it's important. I always want this pop-up here so it can confirm exactly what is going on. I'll confirm it, and there you go. This time in our open orders down at the bottom here, we have all the same details as we had before, but this time we have an take profit and stop loss also associated with it. This means that the second that the price hits 80 cents, it will open up the short position, it will add the stop loss and add the take profit for you, and that's a very, very important thing to do. If there is no stop loss, then you should not be trading, that kind of stuff. So that's kind of the ins and the outs of the limit order. It's actually a lot easier if you're going to do market order. Basically, the market order is going to go in at exactly when this price is right now. So the price is 78.19. That's exactly where we would enter the market. It is exactly the market price. Okay. Now this is useful if the market's already moving or we're mid-move, and I use this one actually a fair bit. I tend to use this a lot more on the smaller time frames than the larger time frames. Sometimes I use the limit, but for the most part, I like a market order if I'm at the charts and I'm monitoring everything. If we're not around to monitor these things, then of course we can use a limit order if we think there's a little bit more room to go in any particular direction. Again, same concept, but we'd use the slider. This time I'm going to go long. I will just keep it on 5x at the moment. We're going to basically risk 10% of the account here. It's still on isolated. We always want to make sure it's definitely on isolated. The take profit is going to be up here at, let's say, 79 cents. And the stop loss will be down here at 70 cents. It's going to be a really bad trade. Would not be a good risk reward ratio at all, guys. If I go ahead and then go and buy long, you get the same kind of information. It's a 5x long position for 𝗕𝗘𝗪𝗔𝗥𝗘. Gives you the current price that you're buying in at, 78.19. It'll be 64-matic. It'll cost $10 to do it, and you'll have your liquidation price there at 63 cents if you did not have a stop loss. Okay, I could go ahead and confirm it if I wanted to enter into the market, which I will do just for the sake of this video. And it says I can't do it because my position has to be at least 100-matic. So I'm going to go and increase this just up a fraction here to 20% of my account, and I'll just go long here. And the current price would be 78.13. I'll confirm it. Okay, and there we go. Now we are in here. Okay, now we have a really tight stop loss, so type take profit even, and we can see that also. So if I come over to our current trades, we now have this area here. You can see that you got the take profit and stop loss area. You got the realized and unrealized profit areas, and all this kind of really good information that's really important to us. You also have the ability to close it or reverse it. And if you reverse this, it basically takes your long position and reverses it into a short position. So if the trade does move against you, you can do that and basically catch the other way, which is really useful feature. Now, if you come and click on the little pencil mark next to the take profit and stop loss area just here, it will actually open up all of these details, right? It will tell us that, all your kind of information about your market order, okay, or your take profit and your stop loss for your market order. So what I'm going to do is I've made an unrealized loss here at the moment. For the case of this video, it's about 20 cents. I will go ahead and just close this position, so I don't want to keep it open for too long. And there we go. So I've now booked that loss technically on 𝗕𝗘𝗪𝗔𝗥𝗘. So what we want to do is we want to talk about these trades and how to get good signals, how to do good technical analysis, and feed this information into 𝗕𝗘𝗪. So let's move on to the next section. Okay, in order to be able to leverage trade effectively, we need to obviously be able to do some analysis on the various different cryptocurrencies. Now, in our Discord server for our members, we actually do an awful lot of charting. We, on any given day, are monitoring around the 100 to 120 different cryptocurrency altcoins and different time frames, right? This is handled by 𝗕𝗘𝗪𝗪𝗀 and myself. Between the two of us, we cover an awful lot of different cryptocurrencies. As a member of our Patreon, for example, you'll get access to the TA forum. And inside the TA forum, there are a whole host of different areas and different technical analysis charts for you to get your teeth into. Now, if you can read the charts, you can jump into, let's say, these other altcoin areas, and you can take a look at any of these different charts and kind of what they're telling you. Now, Festoon and myself, we do Elliott Wave theory, and if you can read Elliott Wave theory, you get a good understanding of kind of what these charts are telling you, then you can obviously go ahead and take these charts and trade them, right? On the back of what we believe the market is doing. Now, these are, of course, just what we think the market is doing based on the current wave counts that we can see in the market. Okay, it's entirely up to you as to whether you agree with that or disagree with that, or have a better understanding of Elliott Wave theory and, can dive into it. Alternatively, of course, if you're not a Patreon member and you don't have access to these things, then you can, of course, go into TradingView, chart up your own charts, get an idea as to kind of where the market is going, and create your own trade ideas. Now, I'm going to focus on, in this particular video, the Discord, because we do cover an awful lot of different cryptocurrencies, and we're charting every single day, right? 365 days a year. So for the case of this video, I'm just going to focus in on the TA forum that we have here in the Discord server, and, we're going to go through a few of these charts. Now, with all these charts in these different areas, whether we go into Cardano and you want to trade Cardano, for example, you can have all the charts there. If you want to trade XRP, then you have all the XRP charts in here. You can go through as many of these as you want. Now, on the back of these charts that get created, what I've gone and done is I've gone and created an artificial intelligence trading ideas bot. And that's a bit of a mouthful. We call it the trader bot, the cheeky bot, the AI bot, however you're going to want to articulate it. What I've gone and done here is basically I've used artificial intelligence to read the charts that are created by Festoon and myself. So we spend a lot of time charting up 100 or so charts, that we have active at any one time. And it's good to be able to feed that information to some AI that can then read the data that's presented on the charts. And when it does this, it's able to then compute what the chart is telling us without having to worry too much about all the kind of the noise and the stuff that's on these charts, right? Let's just take this XRP chart at 4 hours, for example. This can be picked up by my bot, my AI trader bot, and basically give us an indication as to kind of where we think the price is going to go next and give you a trade idea on the back of it. So if we go up into our trade ideas, now this area is only available to our Patreon trader tier, and there's a link to that in the description below if you're interested. But essentially what it does is it reads those charts. You've got a link to each of these. So we'll just take a look at this 𝗗𝗪 chart at the bottom here, or this 𝗗𝗪 trade idea. Now this is a bad idea, and it's kind of telling you it's a bad idea, as long as you're able to kind of interpret this correctly. Okay, a risk-reward ratio of anything lower than 1.5 is not ideal. If it's lower than 1, it's something you just simply shouldn't do. However, what this is telling us is actually it's telling us that the opposite is potentially now valid. Okay, so 𝗗𝗪 here on the 1 hour time frame has a risk reward ratio that is low at 0.291. Okay, and that in itself doesn't tell you too much, but it does if you start thinking about this as a potential reversal in the market. Okay, it says that this long position is potentially almost over. Okay, it has an entry at about 1.7 and its exit is about here at 1.8. That making the risk reward ratio with a stop loss at 1.62 0.291. Now, for the most part, you don't have to understand a lot of those details, specifically from a beginner's area. All you really need to understand is that if it's less than a risk-reward ratio of 1, it's not going to be profitable to keep trading these, because if they do start to fail on you, you're losing more than you are gaining, right? So anything lower than 1, it is not a good idea. The closer you get to absolute 0, however, is actually telling us the opposite is potentially true, and that a long position should actually now be maybe thinking about a short position. We've reached the upper end of where we think the chart is going to go. So in the case of 𝗗𝗪 here, on this particular signal that was given, it was saying that 0.291 is a low risk reward ratio for a long. But what it's not saying is that actually we might want to start thinking about shorting the market at around 1.835. Okay, so I'm probably going to spend some time giving the AI a little bit of a nudge in flipping these around so that these signals are actually a little bit more useful and you don't have to interpret them overly massively. Okay, over here we can see another really low example of 0.926. Okay, so again, these are trade ideas that you wouldn't really want to act on. As we scroll up, there's a few more, 7.9, 6.1. So this is the first thing I'm just going through, because we do a lot of charts, right? We're getting a lot of signals kind of created off the back of these. What we're doing is we're going to go through and we're going to filter out a lot of the noise until we come across one like this. Okay, this particular trade right here is showing us at 1.609. This is basically indicating that it's a potential good trade on AVAX. Okay, we should be thinking about a short potential on a 10 to 25x short for AVAX on the 1 hour time frame. Okay, this was a few days ago. Now it tells us that the entry here was about $10.82. The stop loss would be $11.19, and we should think about exiting at about $10.22. Okay, if you click on the link, this will load up the chart. You can take a look at the chart, and this is what 𝗕𝗘𝗪𝗠𝗠𝗃 thinks is going to play out. And this is exactly what the bot has picked up on. Okay, now we can obviously reflect on this, and we can think where things are going to go. We can make our own informed decisions. Do we think that actually we don't want to enter just yet? We could actually enter a little bit later. Maybe the thing's already started and they didn't pick up on the signal soon enough, and actually it's probably not worth entering now, right? But you get all this information, and it's all readily available right here, so you can make an informed decision. Okay, now with all this information, and you have these kind of trade ideas that are being produced within the Discord server, we can then go over to our BitGet area, and we can go, okay, let's go over to our AVAX chart. So we'll come into here and we'll go AVAX. Let's go to AVAX on the USDT pair, and we go in and we'd go, okay, well, we have our signal. Okay, our signal is quite clear. It says our entry and our risk reward ratio is only barely above 1.5, and 1.5 would be, you know, reasonable, but we would like to see more in an ideal world, right? So up here we could see, okay, well, we've got good risk reward ratio. We could let 10x leverage, seems pretty reasonable. Our entry should be $10.82. So we come into here and we'd say, okay, well, what is the market price? Currently $11.44. So obviously this is a few days old, so, you know, we're out of the scope of this one. Otherwise, I think actually it was somewhere around here that it would have been a good area to kind of be thinking about. So for the most part for this particular trade, it would not be good to enter right now, but you kind of follow the principles that you'd come in here on a limit order. You would put in 1084, I think I said it was, or 1082. Okay, that would be our entry, 1082. Okay, our amount that we would risk would be 10% of our portfolio. We'd obviously make sure that we are going to go short on the market. Okay, it would go short and would make sure that it was 10x leverage. I would confirm that in. We'd make sure that it's also an isolated. We definitely don't want any cross. And again, would come in to take profit. We'd put our take profit down here at I think it was 1022. We'll do that, and our stop loss would be 1108. Let me just go ahead and check those. So 1108 and 1022. Okay, so we'd put those pieces of data in, and then we'd go ahead and click on go short. Okay, and that will allow us then to short the market based on the signal that is provided from the bot and from 𝗕𝗘𝗪𝗠𝗠𝗃 in our Discord server. Okay, and there's a lot of these signals. Some of them are not going to be any good. Some of them are going to be not ideal, but you could potentially short them, like gather on the 4 hour here. You could also take a look at a few of these additional ones. We're kind of messing around with different terminologies and checking them out. But yeah, for the most part, everything here gives us all the information that we would need to make a decision. Okay, so take this one here. ADA on the 4 hour time frame has just come in. Okay, so at the point of recording this video, this is about 1 minute old. Okay, so here we can see that we want to potentially go short on Cardano's ADA. The risk reward ratio is below 0, so it's not an ideal trade. So instead we'd start thinking, okay, it wants to go short, but maybe we want to be thinking about a long position on Cardano's ADA. Okay, so the entry would have been 25 with a stop loss at 25.91, and the exit would have been 24.7. So 24.7 might be an opportunity to go long. So if we go ahead and check out the technical analysis here on the 4 hour chart, see if it will load. There we go. We can see that we got this upper area here. So once we kind of enter into this upper area, we might want to start thinking about shorting the market rather than going long on the market. Okay, so we want to be, you know, thinking that, okay, well, there's a potential move here. We might want to start going short when we come into this upper area. But if we do first of all move down into those kind of lows that we've been talking about, then we can potentially go long and take advantage of those situations. So if I come back to the trade idea, come into here, you can see that it wants to go short at the moment because that's the direction of the current move. But on the slightly longer term view, actually it might be that we want to go long. So we'd keep an eye on this. We might flag this. We might think about the chart. So we might come over into our charts. We might load up Cardano ADA, and we might start thinking about where things potentially could be going and how that kind of want to look. So these signals that are being produced in the Discord server, these are giving you an idea. These are not necessarily something that you follow word for word and you know, entry for exit exactly to the point. Some of them are going to be absolutely fantastic, where they give you really good trades, and other ones where they're below the ideal amount, you're going to have to start to think about them a little bit more. Now, one of the things that we are doing in terms of this new AI bot that we've got featured here is we are going through a debugging process with it. we are looking to improve it, and we're looking to teach the AI to get better. So over time, these signals are going to get enhanced, they're going to get more focused, and they're going to hopefully produce really strong ideas. And these ideas are going to be based on the charts that Festoon and myself create in the Discord server as well. So all of these things will then feed back into your trades and hopefully will make you a more profitable trader overall. But again, that's only if you're not familiar with charting up yourself. There are many different trading strategies out there, many different ones that do work and many that do not. So make sure you do your own research and come to your own conclusions. It's probably worth noting at this point that I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts on what I think is going on in the space, and my bot is basically giving ideas based on my personal opinion. So let me know if you found this useful, informative. If you have, hit that like button. I do appreciate that. If you're new to the channel, subscribe. Stay up to date with absolutely everything that we do here at Cheeky Crypto. Join us down in Discord. And if you're liking the looks of everything that we do for our Patreon members, then why not join us as well? Linked in the description down below. Guys, until the next one, have a fantastic day.